Hello and good morning, everyone. Welcome to our webinar, Foundations for Success, Structuring Your Company. My name is Bontu Galata, and I'm a strategist at ATB, and I work closely with our entrepreneurs and small business clients on their business growth and financial strategies. And I'm pleased to host today's webinar for you. I am based in Calgary, but I'm curious to know where folks are situated, so please let us know where you're joining us from today by entering your city into the chat. Also, feel free to type in your business or the industry, or the business you're starting or the industry that you're in, if you would like to share that as well. And before we get started, I would like to share what reconciliation means to me before reading the land recognition. So my lineage is from an indigenous nation in Ethiopia, and I come from the Oromo Nation, one of the largest African nations to roam the earth. We have a very similar history of assimilation into a culture and a way of life that was different than ours. So similar to Indigenous peoples of Canada, my ancestors lived by certain codes of ethics, which the Inuit refer to as Malagite. It means things that had to be done, and it has four principles: work for the common good, respect all living things, preserve harmony and balance, and last but not least, plan and prepare for the future. The Oromo refer to this as safu, a way of promoting moral and ethical order in society. So today, many of our Indigenous elders would say that we have lost our ways. So reconciliation for me is about finding those ways and connecting with my own Indigenous roots through the Indigenous peoples of Canada. So it is an honor to recognize the land that we are on the same way that my ancestors would have done. So we acknowledge that the land on which we all gather is the traditional territory of Treaty 6, 7, and 8 nations of Alberta, and acknowledge Treaty 4 and 10. We acknowledge the land as an act of reconciliation that honors the authentic history of Turtle Island and the original people of this territory. And now it's my pleasure to introduce you to today's top speakers and topic. First up, we've got Chris Young, a business development and marketing expert with over 20 years of experience spanning multiple industries, including private capital markets, accounting, legal, and education. Chris has a degree in education from the University of Alberta and possesses the ability to articulate complex business models to stakeholders and target audiences. Combined with his creative marketing and technology skills, Chris adds tremendous value to strategic planning and finding unique solutions to tackle multifaceted challenges. Thanks for joining us, Chris.
Thanks, Bontu.
And then next up, we've got Eric Lee, who is a chartered professional accountant and the owner of ELPC. He has many years of experience in corporate management with Bell Canada and has a degree in psychology from the University of Alberta. Eric's multifaceted professional background translates to a unique perspective in working with clients and businesses, especially in the professional services sector. Thanks for joining us, Eric. And then last but not least, we've got Colin Luke, who is a partner in the Calgary office of Lawson Lundale. He is a member of the firm's business law, corporate commercial, corporate finance and securities, and mergers and acquisitions group. His practice covers a broad range of commercial transactions, including the structuring and implementation of share and asset acquisitions, mergers, financing, and corporate reorganizations involving strategic acquirees, investors, vendors, entrepreneurs, family business owners, family offices, and private equity funds. Thanks for joining us, Colin. I'm super excited for today's session. We've got a lot of talent here. So today they'll be taking us through a session into the aspects of choosing the right business ownership structure, a decision that is pivotal for your venture success. We'll explore the nuances of sole proprietorship, incorporations, partnerships, nonprofits, and cooperatives, shedding light on their tax and legal implications. And you'll also gain an understanding of the pros and cons of each structure to make an informed decision that aligns with your business goals, setting a solid foundation for your entrepreneurial journey. And before they get started, just a quick note to our audience. If you have any questions throughout the webinar, please enter those into the chat at any time and they'll be addressed throughout the webinar. And if we have time at the end, we will also address them at the end. And following today's presentation, you will receive a follow-up email within a few days with information on how to access the recording and additional follow-up materials. Again, thank you, Chris, Eric, and Colin for sharing your time with us today. And over to you.
Thank you, Bantu, so much for that amazing introduction. And thank you, everybody, for taking time to join us. I know as startup entrepreneurs, you're super busy, but we've got a exciting segment here, and we're structuring it in a little bit of an interview format, so it's a little bit more engaging. So as Bantu mentioned, make sure to add the questions into the chat as we go along, and hopefully we can get Eric and Colin to answer them as we go through these different sections. This is one of the, I would say, most important parts, one of the key parts of starting your own business. As someone who has helped a lot of entrepreneurs and worked with a lot of entrepreneurs, I know sometimes not having the right structure for your business set up to start causes a lot of problems down the road. And having worked in a large law firm before and worked with Colin, we know exactly some of these difficulties and challenges that entrepreneurs face if they haven't set up their structure properly. So I think this is a very important topic to cover, and happy that ATB has invited us to chat about this. So as Bantu mentioned, today we're going to be talking about 5 structures, but I'm going to focus more on, and based on the survey that was taken before this presentation, sole proprietorship, incorporation, and partnership are the key ones we're going to focus on. I did want to quickly add in nonprofit and cooperatives because sometimes we don't think about those 2 structures immediately. They're not the most common, but they may play a role, especially in how dynamic the business environment is in today's world. And sometimes those might be one way to get your idea off the ground. So I wouldn't take those off the table, but we'll cover them lightly and focus on the other 3. Eric and Colin, are you both ready to go?
Ready to
Absolutely.
rock.
Awesome. Okay, so let's start with sole proprietorship. This one is probably known for its simplicity. It's the one that everybody goes to first. Setup is super easy because it's pretty much tied to the individual. And at the same time, though, I would say there could be some issues, if not, thought about from a long-term standpoint. So, and I think a lot of it ties from a legal realm. So I'm going to start with you, Colin, for sole proprietorship. Let's look at what personal liabilities happen or entails when it comes to sole proprietors.
Yeah, your introduction to that type of structure is right on the mark. The reality is, the reason it's so simple is it's because it's actually the individual. All right. So this is just the individual actually deciding that they are going to start operating a business. And any liability that flows from operating that business is the individual's liability. So there's no limited liability protection. Any assets that individual has personally, so their house, their car, anything that they own, whether it's related to the business or not, becomes at risk, right? In certain circumstances where, if they were to get sued for, some of the business that they're operating, some of the services that they're providing, that's the big concern. So it's literally unlimited liability to that individual, all assets that they own. So that's where the big risk is.
Some of the questions I've received from prospects is, they're in a professional industry. So, for example, healthcare is one. And that industry is governed by an association and it requires a certain level of insurance to cover liability. Would you say having that oftentimes takes care of that personal liability risk?
Yeah, it
In
sure
sole
helps.
proprietorship?
Yeah, it sure helps. Insurance in any kind of, situation, whether it's a professional, kind of mandated insurance requirement or just simply getting insurance yourself. And it's just good business practice to contact your broker, see if there's some insurance protection for director and officer liability type things, just general liability insurance. If you're operating vehicles, of course, you're going to have that just to keep them on the road. But any time that you can get insurance and it makes sense from a business perspective to do it, it mitigates that risk. certainly in the professional capacity, as like lawyers, like we have it, and there's medical insurance, of course, to cover any kind of liabilities that flow from those industries. But just any industry, yeah, look at insurance for sure. Occasionally insurance companies don't want to pay out insurance. so there is that, and so it's not an absolute fail safe. So that's why people typically, once their business gets going in any meaningful way, will look at other business structures in order to limit or mitigate the risk of liability that is associated with a sole proprietorship.
Thanks, Colin. Eric, on the taxation side, I'm assuming because the sole proprietor and the individual are the same, are the tax obligations then equivalent to personal tax rates, I guess, for a sole proprietor?
Yeah, generally you're going to still have more complications in terms of filing your personal taxes because you're going to have to file business income. If you haven't run a business by yourself before, let's say you've been an employee, usually you take your T4 slip, your other tax slips, and you would just put them in your tax software, give them to your accountant, and your taxes are done. But now that you're running a business, there is a need to actually determine how much taxable income you've derived from that business. So how much profits you've made. And this is where a lot of people get into trouble because they may not be keeping the receipts for expenses. They don't know how much they have invoiced out, or maybe they're not even thinking about money that they've taken, but they haven't earned yet. So let's say you're taking deposits. And you haven't done the work yet. Do you actually record that as income or not? There's a lot of subtleties. In addition, there's also a different filing deadline. So when you have business income, you can file your taxes by June 15th. But the thing is, you still have to pay your taxes by April 30th. So just by having business income on your tax return does change a few things. And also, if you want to look at what you can or can't deduct as a guideline, I would recommend you take a look at the guide that the CRA has. It's called the T for, the letter T, sorry, T for Tango 4002. Just Google that and you'll get a very kind of in-depth guide to start your investigation, or even just to refresh what can be deducted as a business expense. And that's a really big thing there. So keep your receipts, do your bookkeeping. I have some clients that actually do bookkeeping for not just their business, but also for personal expenses. And that way they can budget what's happening in their personal kind of world, and also keep that separate from their business activity.
And that's actually a good point you bring up, Eric. Do you run into any issues with CRA when it comes to what is defined as, in your sole proprietorship, your personal expenses versus, business expenses? Does that get challenged a lot at the CRA?
Oh, absolutely. And what ties into this here is just having not, sometimes when you're starting a business, you're not really defining what your business actually is. It might start out as, painting a fence for a friend, and then it's to doing some repair work on someone's fence. And things sort of evolve to a point where you may be providing a business service, but you're not exactly, calling yourself a painter or a tradesperson. And sometimes then you might be claiming things that, it could be lunch, it could be coffees, it could be gloves, it could be tools. And suddenly now you're sort of running into gray kind of zone of where are these actually business expenses? Are they actually made? Are the expenses, incurred to earn business income? And then if Siri asks you, well, what is your business? And you're saying that, well, I paint houses and I also repair fences and I also repair computers. Then you actually have, you may have more than one business technically. And now you have to make an income statement, which is called the T2125 on your business, on your personal tax return. You may have to make 3 of them instead of just one. So you can see how things get pretty complicated quickly. And in addition to, if you have over $30,000 of income, uh, net profit, just $30,000 of business, you would have to file for GST. So you have to collect GST. And that's where the CRA is really doing a lot of investigating and checking to see if you have collected that GST, if you're paying to them. And that is a big issue that we deal with of all business sizes.
Perfect. There are some questions about holding company structures and operating company structures, as well as potential tax implications of, let's say, a sole proprietor providing services to the corporation, which then sells to a third party. I'm going to hold off on getting you to answer those when we get to the corporate side, the incorporation side, because I think then we can tie those together. But I think those are great questions that we should definitely look at. We got a question here that says, does this depend if the work falls under a different NACIS code? So I guess to Eric, is that how CRA determines if that's different type of work coming into the business, or you're sole proprietor?
Generally, it doesn't really have to be, because sometimes, let's say you have a painting business, right? So that'd be one code. And so NACIS is basically just a code that the CRA and also the Alberta has a code system also just to determine what industry you're in, right? So me as an accounting firm, there's a professional services basic code. If you were in trades or if you're manufacturing, there's a different code. And more so, the purpose of the codes is just so that the government knows what industry you're in, how to sort of gauge your performance, and if your ratios on your financials look okay. Because what they're going to do is they're going to take all the tax returns in that particular code of that industry, and they're going to see, oh, okay, generally they spend this percentage on wages or advertising or meals and whatnot. And if you're an outlier, maybe that might be a question that they want to
A bit of a
verify
red
with
flag
you.
for them to look at.
Yeah, and so when you're a sole proprietor, though, you could have multiple businesses that are in the same technically code there. For example, if I was painting houses on my own, and I call it Eric's Painting, and I also have a different business called Chris and Eric's Painting Company, which is a partnership between me and Chris. Those are two separate businesses. Now, it depends on really how you're presenting the company to the public, how the revenues and profits are sort of kept in, let's say, bank accounts, or where expenses come from. But again, there is a lot of kind of call it, I want to say, wiggle room, but there's definitely less barriers than your typical kind of you get a T4, you have employment income, and that's a very kind of rigid way to record your income versus when you have business. So this is ultimately where having bookkeeping, having sort of a little pre-planning could help a lot.
Okay. So let's move on to setup here then. When it comes to setup, Colin, go from a lawyer standpoint in terms of registration. Is there anything different that needs to happen when it comes to, I don't know, letting the government know that you are a sole proprietor?
Yeah, there isn't actually anything that you need to do. Oftentimes people will file a trade name just so that there's some public recognition of how they're operating. The actual legal entity is still yourself. So if I was going to be contracting with somebody, it would be Colin Luke doing business as, if it was a landscaping company, or not company, but a landscaping business that I was trying to set up, like it'd be like Green Thumb Landscaping, for example. I might register Green Thumb Landscaping as a trade name. So anybody that did a search on that would see that Colin Luke owns it, but you're contracting with Colin Luke. And so anything that you're entering into with anybody is yourself personally as the individual. But from a registration perspective, that's about it. You'd want to check with your, local municipality to see if there's some licensing requirements for business licensing and things like that. But by and large, that's what makes a sole proprietorship so simple to get going, is it's just you.
Awesome. Eric, you had mentioned about certain income levels when it comes to sole proprietorship. I'm assuming sole proprietors will have to file for GST as well if they make a certain amount. Can you just maybe quickly talk about that?
Yeah. Actually, let me step back to that last question there too about the separate businesses. I would suggest they can take a look at the CRA's bulletin, IT-206. That will give you some somewhere to start off on, just to see, recording multiple businesses under your sole proprietorship. And then back to your question about GST. GST is a beast on its own. So we tend to sort of think of income taxes as the ultimate kind of filing that we have to do. But really, GST permeates everything, from everything we buy, almost every industry, many income levels. There's really no one that is, you can be exempt or zero rated technically, but that's only if the CRA has already decided that in the structure there. So when you're when you're in any kind of business, and you have basically made over $30,000 of revenue, so 30,000, that $1 right afterwards, there's 5 cents there that you should be collecting from this year, from your client, and remitting to the CRA. So what you have to do is you have to go online, and hopefully you already have your online access with the CRA for your personal taxes. That's one thing. And then you would go and register for a business number. So the business number is going to be like a social insurance number, but for your GST. And the interesting thing is that as a sole proprietor, most of the time we think of someone that's solo, so a solo entrepreneur, but you could have employees. I've met sole proprietors who have teams of 10. They have office leases. It's a full-blown business. But for whatever reason, they just didn't incorporate. And so you have to make sure that those GST filings are done. And if you're gonna file annually, quarterly, or monthly, that's up to you. The CRA will let you file more often than you actually need. But for most of the proprietors, unless you're making, unless you're up to the $5 million mark or anything like that, you really shouldn't be filing more often than you need to. So annual GST filing is a good thing. Just make sure you're doing your bookkeeping, and remember that 5% of the revenue that you have in your bank is not yours. So just be aware of that there.
Okay. One question, good question here that actually I was going to ask you too, Colin, about the naming of your company. So Carol Lee here has a question asking if you can speak to the rules about naming your company. Recall, I could not use my own name. Is there a difference between using your own name and then doing a separate trade name, operating name, or can you even do a trade name that's your own name?
No, you wouldn't be able to do that. It's just too much. You can't trade name, because there's a lot of John Smiths in the world, right? And so it's you're prohibited from doing that. I mean, when you get into, you can do a play on it. So if you want to say like John's Plumbing, Services Ltd or something like that, they kind of there's different elements of every kind of legal name, including the trade name, and what distinguishes corporations from sole proprietorships is they have like a legal element at the end, like corporation, Ltd, incorporation, company, limited spelled out. That designates and lets the world know that we actually have a legal entity separate and apart from a sole proprietor. The sole proprietor doesn't have that legal designation, but it has descriptors, and it has some of the same types of restrictions. I mean, it gets to a point where the name of your sole proprietor, or sole proprietorship, if I said it was Colin Luke, well, my name's Colin Luke. There's no distinctive change there. So it'd have to be something that further describes what it is and the services that you are providing. It could be Luke's Landscaping or something like that. You could probably get away with, for example.
Right.
Yeah.
Another question here that we'll take for this last bit here is from, I think it's pronounced Jackie. And the question is privacy implications, and this might be a little bit out of your realm from a legal standpoint, Colin, but privacy implications of registering with an admin service address. So obviously a lot of sole proprietors, they operate out of their own home, but they may not want that as the business address. Are there any privacy implications there with an outsourced, admin service?
Not sure I entirely understand the inquiry, but yeah, I mean, bottom line, there's some minimal information that is disclosed anytime that you're making a registration with, for your company, for example. Every company's got to have a registered address in the province of Alberta, right? And oftentimes, I mean, it literally can be any physical address. So sometimes it's people's homes, and there is some sensitivity because it is a public record, and all you have to do is search the corporate name, and you can get that information. Same with directors. Directors have their own residential address there often, so that's the kind of thing that might get disclosed from time to time. Often directors do use their place of business if there's those kind of concerns. Oftentimes they use other third-party service providers like law firms or other organizations to serve as their registered address, and even contact agent for service. All of that stuff is public record. So if there is some level of sensitivity to having the person behind the company disclosing that level of personal information, the residents, then there are ways to get the assistance of third-party service providers where you can use their addresses. So hopefully that answers the question.
Yeah, and if that wasn't clear, Jackie, then we can definitely add in more context to that offline. Eric, Debbie has a question here. Is the $30,000 revenue for GST cumulative or for each year?
Generally, if you are going to hit the $30,000 revenue within the year, then like, let's say it's December 31st and you had $29,000 of income, you're okay. It starts all over again. But if you actually hit $30,000 in the first 3 months of the year, then basically right away after that you should be collecting GST.
And this isn't something where if, let's say, this year I'm going to earn over 30,000, so I'll collect GST this year, but then next year I think I'm going to do under that, so I'm going to cancel my GST number and I won't collect. Or is that? Yeah. I don't know if you've seen a scenario like that.
No, it's a common question we get, and unfortunately, once you register for GST and you have a GST number, it sort of sticks with you. You do technically have to be quite careful about it, because the funny thing is that if you have a GST number, so as a sole proprietor, for sure, it's on yourself, right? And you're selling stuff on Facebook, technically, it's arguable if you should be collecting GST on that. Now, of course, it's not necessarily part of your business, but again, GST is like a big beast. That being said, I would say that if anyone wants to read up more about it and just get the details, generate information for if you should register and whatnot, look up the guide RC 4022. There's actually a 2023 version of that. Again, you just Google RC 4022, and there's a guide of that there. And generally, they make it pretty straightforward to read. It is a little bit heavy, and it can get confusing when you're trying to see if that the rule applies to yourself or not. But generally, that's what you want to do. And a big tip here is always talk to someone ahead of time. So whether you're calling CRA, whether you're looking for a lawyer or an accountant, just ask them these questions ahead of time. It's always way easier than to figure things out when we sort of feel like we need a time machine. Then you're already in a complicated situation there, right? So it happens a lot, though. So if you're in that situation, not a problem. Just get started now and find someone to help you out with that.
And along that mark too, Eric, Jackie has a question here about taxation. When you charge GST, it's based on where you are and not where your client is, regardless of currency. Is that correct? So for example, if let's say a US person buys your Eric book that's in Canada, do you technically you don't have to charge GST on that, right?
Well, here's a funny thing here, and I apologize for the sirens if you can hear that there. Here's a funny thing here. So GST is what we think about in Alberta quite a bit, but there's a lot of people doing businesses that will provide services to other provinces, right? And other provinces, beyond GST, they might have HST, which is like a different version of GST, which is the provincial sales tax combined with the GST that the federal government collects. but there's also PST. So if in a different way to put this, you should be thinking about sales taxes, and you would want to look at where your clients are coming from. Generally, you actually have to collect the proper taxes where that client is. So if, let's say, I'm selling something into BC, and I would have to actually collect PST on that, charge that client PST. And this is where platforms like Shopify and other kind of online sales platforms have helped a lot, because back in the day, it was up to you to figure all this out. Where's this client? Saskatchewan. Okay, is there PST? Do we have to charge PST? Funny enough, I was looking into this for myself because we have some clients in BC, but accounting services is actually one of the things that are exempt from PST in BC. So fortunately, we don't have to worry about that. But that being said, there are things you should look at. And it depends on if you are, let's say, selling to the US, then of course you don't have to charge them GST. But it's not always so clear cut. So look at where your customers are coming from. And on the business side, if you don't know where your customers are coming from, then you may want to, of course, Chris, you would know this, invest in some sort of client relations management system, or at least track them or something like that, just see where things are and go from there. But yeah, I would recommend looking at the guide and also then seeing where your clients are, Googling the provincial sales tax information. And it's interesting because, like I said, sales taxes are just as complicated as income taxes.
Sorry, I had on mute here. But those are all good points, because they do flow into the corporation side as well. I think a lot of this is applicable for that, so I'm happy to keep going on this. And so as we transition over to the corporation side, Colin, I just want to answer this one question because it probably does fit the corporation side as well, from Gazin Farr. He has a question about if Mark Yu can register a trade name as BB Gardening Services, can someone else do business as BB Gardening Services?
Yep. Yeah, there's no name protection with a trade name. You could trademark it, which is a different thing entirely. And you often trademark, a name along with the type of logo, and that's a little more expensive. That gets into like the $3,500 to $4,000 range, because the big part of that is actually looking at the existing marks to see if there's going to be confusion in the marketplace. So there's a lot of diligence that goes with that. And then along with that, once you're given that mark, you have some intellectual property rights over it. But yeah, no, it's the trade name puts everybody on notice that you're using it, and you do have some common law rights to name usage. And but just by you filing that, it doesn't mean, with a trade name, it doesn't give you rights. It actually, you have more rights if you have a history of usage. So if you can show that historically you've been using it longer, then you might have more rights. But the trade name registration, it's useful because you can show that you had been using it since that period of time at least. But in and of itself, it doesn't give you absolute protection. Not like a corporate name. A corporate name, actually, with registry, it gives you some protection because nobody else can use that exact name.
Perfect. So that's a good segue into corporation then, Colin. Thanks.
Yeah.
So as Colin said, yeah, so there's definitely different levels of protection. Just unlike sole proprietorship, incorporating company actually turns the business itself into a distinct legal entity, separate from the owners. As probably most of you know on here, the owners in return are the shareholders of the company, and they own shares of that distinct legal entity. So Eric, I'm going to start with you on the corporation side, because we do get a lot of inquiries where entrepreneurs oftentimes go ahead and get incorporated before really thinking about the long-term strategy and plan of what they want to do with your business. So from an accounting and I would say record-keeping perspective, which you did touch on as sole proprietor about keeping your receipts and having good bookkeeping, if you're going to set up a corporation, what should new entrepreneurs know when it comes to accounting?
I would suggest you definitely get an accountant, or at least have an accountant consult with you. I mean, I'm not trying to shill for my own industry here, but the complexities occur really quickly because when, Colin will speak to this too, but once you incorporate, you have created another individual. So what gets complicated really quickly is that you can technically no longer go into that individual, that corporation that you created, so the bank account there, and just take it into your own pocket. This is almost like saying, if I can walk into Bell Canada and ask for money, and they'll be like, no, are you an employee here? No, you don't work here. You don't do anything here. Why would I give you any money? And this kind of legal separation is really hard to understand at first if you're just incorporating for other reasons, such as looking more professional or liability or different things. But yeah, when you look at the tax side of things, all the revenue that goes into the corporation belongs to the corporation. And let's call it ABC Corporation. It doesn't belong to, Eric Lee, the individual. I would have to take a dividend out. I would have to get a salary or something like that. And of course, no one stops you from just using your bank card and going to ATM and doing whatever you want, right? So I need $500 to buy supplies. I'm going to put some sales into my pocket. Oh, I'll deposit it back in the bank later. And it gets really messy quickly. So now when you have to file your corporate taxes, what are the profits, or are they complete? And this is where you have multiple hats of liability. So not only are you the shareholder of that company, so you might have some shareholder benefit problems, you might have some tax issues there personally. The corporation might have tax problems too, because we don't know if you should be deducting expenses, if you don't have the receipt, or was that a personal expense, if that revenue was actually recorded. And this is really why you should start with an accountant, at least, or a bookkeeper, or both, really, just to explain sort of foundations of what's going on there. And you really have to start almost having like a split personality, where you are one person, the corporation is a different person. You can't it's like that old saying here, pardon's got to be a little bit gross, but you can pick your own nose, but you can't pick your friend's nose. So you can spend your own money, but you can't just spend your corporation's money personally like that. And that's sort of the complexity that starts of bookkeeping, record keeping, and filing. A lot more filing. You have your corporate tax returns, you have your corporate GST. Some people might still have a personal sole proprietorship business, and they might have their own business income filing, their own GST filings, and you have to keep all that straight. And of course, your corporation, if it pays you a dividend, it'll have to issue T5s. If it pays you wages, it'll have to create T4s and give you that T4. And there could be a lot of things. And one thing I see missed all the time and get confused is the annual return. So I'll let Colin talk about what the annual return is, but that's actually not a tax return. That has something else to do with being incorporated.
Yeah. And so before you go on that, Colin, on this note, and I want to answer Debbie's question here. She said, at what point would you incorporate or go from sole proprietorship and then into incorporation? So that's one of the biggest questions we get here at our firm. And oftentimes, and I'll dovetail off what Eric said, is everything he listed in terms of keeping your accounting straight, it is costly. Filing isn't oftentimes as straightforward as doing your T4 personal income tax. There's a lot of complexity, and seeing Eric work with clients and figuring out how to allocate, the income or expenses in certain ways, it's definitely not an easy task, or easy as going to get a QuickBooks subscription and then filing from there. There's a lot of nuances. So I would say, Debbie, to answer your question, the increase in revenue is probably one big marker. Does it make sense if you're only making $50,000 in your corporation? Does it make sense for you to allocate $3,000 towards annual, just basic accounting T2 filing, let alone bookkeeping?
Mm-hmm.
So I think revenue is definitely a big one. Second is going to be legal. So this is where I'm going to segue over to Colin here. Is when it comes to incorporation, Colin, what are some of the legal requirements first? And then second, I'll let you get to Eric's question more about, what is the annual returns and things like that. So I guess let's start out from a legal requirement standpoint.
Yeah, so I think I might back up just a little bit to the question, just to kind of round out, when you might actually be looking the economic, if you don't mind, the economic, driver, from a tax perspective. Sometimes it makes sense. You get to a certain threshold where, the expense, of operating a separate corporation is justified by, the tax treatment that you are achieving with that corporation. So that's definitely one of them. The other reason you might do it is just limited liability protection, right? So as a shareholder, unless you do something, inappropriate, we can talk for days about what that might be, but like, a simple example would be, you have a creditor who's owed money and you just decide to take a bunch of money out of the company and you pocket it yourself, and so the creditor doesn't get paid, you do. You're probably going to get sued personally in that kind of context. But generally speaking, as a shareholder, you have limited liability protection, and so the corporation, it becomes the separate part. That's the silo that we're talking about here. It's a separate person. It's the one that's contractually obligated to all of its customers. It's the one in the operating the business that if something goes wrong, it gets sued. The shareholders don't get sued personally. So from a liability perspective, it makes sense to incorporate immediately. Sometimes that just practically isn't possible because of cost and other things. But from a liability perspective, for sure. It also makes sense to do it right away if you're going to bring in other investors or other shareholders, because it's a recognized platform, and a really good one to have people invest, to have ownership, because it divides ownership in that person in a really clear way, where when you're running sole proprietorship, you find somebody you want to work with. It's like, yeah, why don't you throw some money in? You fall into something that's like a partnership, that but isn't well defined. You don't really have agreements to set up the rules of the game, which we can talk about when we get into partnerships in a bit. But those are the kind of justifications for getting into a corporation, from a sole proprietorship, and what might drive you to do that. In terms of, legal requirements, all of these, from this point on, whether it's corporations, partnerships, cooperatives, the not-profits type of thing, your starting point is get a name or not. You might be doing a numbered company or something like that, which is just literally the registration number that the, in this case, Alberta Corporate Registries would be giving you. And then it's Alberta LTD or Alberta INC. So numbered company with those. If you want a name, you got to pick the name, and then you got to see if it's available. So you run a nuance search and get a nuance report, which reserves the name for 90 days. And it gets into those elements that we talked about. So, if it's Green Thumb Landscaping Inc., you throw it in there, you see if there's anything that's similar. If it's right on the money, you can't use it. If the only distinction is it's INC LTD, too much confusion in the marketplace. So you'd have to change your name to something other than Green Thumb Landscaping, because it's just simply not available. So you get the name, then you come up with your articles of incorporation. Probably everybody's eyes are glossing over, going, "This is boring," but you have you have your articles of incorporation. Primarily, there it just sets out the authorized share capital, the different classes of shares that are available. You file those. You file your notice of address, like we talked about before. Every company in Alberta has to have an address that's a registered address here in Alberta, so you have to file that, and then you have to file your notice of directors. Once all of those things get filed with Alberta Corporate Registries, you're incorporated. All right. The next phase of that is to actually organize the company. That's where you are, having subscription agreements come in for shares, share certificates being issued, your organizational resolutions where you appoint directors and officers and deal with a few other corporate related, type things like, who the banking is, what your year end is going to be designated at, are you dispensing with an auditor, just mechanical administrative type stuff. But you organize that, you issue your share certificates to people, you take in your subscription proceeds, and it's all thrown in a minute book. Your minute book is your Bible. It's got for the corporation, it's got all the history, every decision that was made in there that was passed by way of resolutions or in meetings. It keeps track and registers of who your officers and directors are, who your shareholders are. Carries all the share certificates. It has your articles. It has your bylaws, which are adopted. So it literally has all the what we call constating documents associated with that corporation that gives that corporation life.
That's awesome. That was a incorporating 101 right away there. So two things you mentioned, Colin, that I want to address because you're in that space too in terms of M&A transactions and raising capital and setting those up. Raising capital is a big one. I was in the industry for about 10 years helping companies raise capital. And definitely you can't raise capital if you're well, I shouldn't say you can't, but no investor is going to cut you a check personally to invest into your sole proprietor to launch your startup. So
No.
I think having your corporate structure is necessary. And I see some questions about like corporate structure and taxes and all that. I'm going to take those ones offline because they are a little bit more complicated, and it's probably like a whole other hour to talk about like, holding companies and tax flow through things like that. So we can definitely take those offline. But I think from raising capital standpoint, if you need to raise friends and family capital, if you need to get outside investors in, you're going to need to have some type of separate legal entity, or else you won't be able to raise capital from that standpoint. Colin, anything you want to add to that?
Yeah, no, that's exactly right. I mean, with a sole proprietor, you're generally just limited to debt as a way of investing, and so it's very straightforward. It's you're advancing a loan and you're getting some kind of return by way of interest. You can get into other types of arrangements, profit sharing, but again, what that turns into is just another agreement that's going to take time to develop and draft, and there's going to be expenses associated with that, and it's going to be a little bit out of the box. Anytime you start drifting out of what a conventional typical type of structure looks like, it gets complicated and it gets expensive. So when you have a corporation, everybody knows what a company is. Everybody knows that the ownership is divided up by shares. You know that proportionately you can own a chunk of that company through those shares. You can value that company so that if you're going to invest in it, you can say, yes, these are what the shares are worth. These are what my shares will be worth. This is what I'm willing to pay. And it's recognized that way. And then when it comes to the investment, man, there is 1,000 different ways to do that. You can do debt, you can do equity, you can do a combination of both. You can have debt that converts into equity, equity that converts into debt. You can have agreements, like safes, where it's an agreement in the future that you will acquire, equity. There's 1,000 different ways of doing it, but it's all based around that corporate structure. So good thing to have.
Awesome. And we're at about 11:47, so definitely we're not going to get to some of the other ones, but based on the questions, I do definitely want to focus on these, corporation and sole proprietorship. And we can quickly touch on partnerships, because partnerships could be a combination of a corporation or sole proprietors getting together, and it's all bound by a legal contract. And Colin, I can get you to talk about that. But the other thing I'll add about setting up the third thing I'll add about corporations, because we had Eric talk about more of the expense of managing the accounting side for a corporation. That could be one factor. Colin, you talked about legal liability, protecting yourself. That's going to be your second. The third one I'll add into that, having owned an apparel company many years ago, is credibility with the industry and the suppliers. Starting a clothing company, no supplier is going to work with you if you're a sole proprietor. They all wanted to see my corporate documents, make sure I was a legitimate entity set up to actually sign off on some of these agreements. So depending on your industry, that may also require some level of credibility, and incorporating, I would say, definitely gets you that. So that's the third one I would add to that. Eric, in terms of just, so I got a question here that is probably applicable for both sole proprietors and corporations, but it's talking about like bad debt, where you're running a business, you sell a widget for $20,000, and the client doesn't pay. Does that revenue so 2 points to this question. With that, how does GST get calculated there, right? So let's say it puts you over the threshold, but you never actually receive payment. Does that affect the fact that you still have to collect GST? So I'll get you to answer that one first.
Yeah, so that is going to be like on the final exam of any GST course, and I would say an advanced GST course. So that's a funny thing, because you deal with these situations that happen all the time in real life, and that is already a very complicated question. So Caroline, that's an awesome question. The thing is this: if you are doing accrual accounting, so let's say I am offering, services for accounting. I invoice a client $30,000. I have an accounts receivable with that client, right? So that's where I would assume, because you haven't gotten actually paid yet, but you have an accounts receivable. that is treated as the number that you would use to see if you've passed that threshold. So once your accounts receivable goes over $30,000, yeah, you have to register. Now, if you don't have that revenue, that's okay, because you wouldn't actually have any GST to actually pay to the CRA, because of course when you finally file your GST return, you would put what your actual revenues are, including your accounts receivable. So sometimes it's a timing issue. And what ends up happening is, let's say, and I would say timing issues are probably the bane of any kind of tax problem or GST problem or even legal problem, because sometimes when something happens, we don't have all the options or a crystal ball to see into the future. So we don't know that client's not going to pay us, right? But what ends up happening is that we can maybe adjust the GST return, or we might be filing the next year's GST return less the $30,000 of revenue because we have a bad debt to write down. So there's multiple ways that we can sort of go from there. And that's sort of why you need someone to always be on top of the book. So you want that follow-up as soon as possible, because even if you have no cash in your bank account and you have accounts receivable only, you are going to be liable for that corporate tax, or frankly that tax, because that accounts receivable applies also for sole proprietorships. And CRA is not going to care if you're like saying, hey, I didn't get paid yet, so until I get paid, CRA, you don't get paid. That's not how it works. So you want your accounts receivable to be cleared as soon as possible. So definitely think about, is that part of your business?
Okay.
Just to touch on one thing here of corporations, look up personal service business out there for smaller people out there. Smaller businesses out there, not smaller people. Smaller businesses out there that have less than 5 employees, or 5 employees and less. And you're in a situation where it looks like you're an employee, except you have a corporation. You really want to check out what personal service business is, because that's a big issue. You're actually not, in the CRA's eyes, a corporation for tax purposes. You're not going to get all the business deductions. You can only deduct wages. Basically, CRA is saying you have to pay yourself, like the corporation doesn't exist. So that is an issue there. We deal with that quite often because we have some, for example, some people that worked on the oil industries and natural gas and sort of those kind of industries up north in Alberta, and they had to get incorporated, otherwise they can't get that job. But they're using the corporations, so the company that hired them, they're using their tools, they're working on their sites, they're working using on their schedule. They're almost like employees, and they are not really necessarily a full-blown corporation. They may not have any other clients except for that one company hired them. And so that's a complicated situation in itself, but it could just result in a lot of tax problems there. So personal service businesses, what you want to look up there too, if you are a smaller corporation, just to make sure.
Yeah, that actually kind of equates to a question that Jackie had about the differences, advantages, risks of being a vendor to the corporation versus making myself an employee. So again, this is one where we could spend a lot of time on, because there's quite a few differences, I would say, about that. And there's a lot of nuances too, depending on the industry but I do want to get to this one question, and then we might need to wrap it up here. But Colin, on the corporation side, Jackie had a question about the difference between incorporating federally versus provincially. At what point, or I guess what's the difference, and why would somebody need to register federally or provincially?
Yeah, this boils down to preference. There's a couple of reasons why you might choose to incorporate federally. Basically, every provincial jurisdiction in Canada, and then the federal jurisdiction on top of that, has some kind of regime that allows you. So they've got Business Corporations Act that allow you to incorporate. And so the distinction is, the federal one, really, it gives you some name protection, right? So once you register your federal corporation, no other jurisdiction, no other provincial jurisdiction can use that name. Okay. The wrinkle with the federal one, though, is you then have to extra provincially register that federal one in the province which you are going to be operating. All right. So it's like a double cost, where if you knew you're just going to operate in Alberta, you could just incorporate an Alberta corporation and you don't have to do that extra provincial registration. So you don't have that cost. Once you're in Alberta, that's all you have to do. So if cost is a concern, you'd probably go the Alberta route. The other thing is, if you do an Alberta corporation, that doesn't preclude you from extra provincially registering that Alberta corporation in other provinces as well. Okay. So here's the bottom line. If you anticipate that your business is going to be operating in multiple jurisdictions and the name is vitally important to you, then you'll go the federal route and you'll extra provincially register in every single province that you want to be in. If you think you're just going to be in Alberta, or you're just going to be in Alberta and maybe BC, you can, incorporate in Alberta, extra provincially register in BC, and then kind of be done with it. You can extra provincially register in every single jurisdiction with an Alberta corporation to protect the name that way. But really, it boils down to that. Both regimes are pretty user friendly, right? Canada, by and large, just the whole incorporation regime, like compared to other places in the world, we are super user friendly. So there's no real advantages one way. There's some subtle differences in the legislation that gives rise to corporations, but nothing that you'd get too fussed about. The only other driver is internationally. Some people think that having a federal corporation shows a little more moxie. It's like, oh, these guys are a bigger deal because they're a federal corporation. But within Canada, nobody thinks that way. So that's kind of the distinction between the two.
And Colin, I'm going to stick with you here for this question from Elaine. She asked, do you need to dissolve and incorporate business if you have a year that you have no revenue?
Nope. You don't have to. And this probably goes, I'll pick up on the point that Eric had brought up before about the annual returns. So no, you don't have to. You can actually have a company sit there dormant year over year for as long as you want to continue to pay your annual return, we file the annual return and pay the annual return fee to Alberta Corporate Registry. So here's the thing. You got your tax returns, tax stuff. All right. Annual returns are not tax related whatsoever. You're basically letting, whatever the regulatory regime is of Alberta Corporate Services in Alberta, you're basically saying, we're here. Nothing has changed, or if it has changed, you'll make filings to tell them it's changed. And we're continually going to operate. Here's my $50 is basically kind of what you're doing with that. If you fail to do that over a period of time, i.e., 2 years, they will automatically strike the company. All right. So if you don't file that annual return, they'll strike it, and it's like you're dissolved. And then if you need the company, like maybe it has some assets still because you didn't move anything out of there, it's kind of, you're in this limbo where you exist, but you don't really exist because you've been struck. It'll come up as being struck. It'll come up as essentially being dissolved. But if you need to deal with it, if that happens, because it happens quite frequently actually, where people just forget to do it, you revive the company and then you deal with, either you want to keep it alive or you do an orderly wind up and dissolution. And so you can dissolve the company. So it might be that, you've got a company that's sitting there, it's got no assets, no liabilities, and it is dormant. You don't want the carrying costs on an annual basis. We can do an organized dissolution of that company, and it's relatively inexpensive. And so people, typically go that route because the other reason is you kind of want to start the limitations clock for claims, and so you that might be filed against you. So you kind of want to kill the company and do it in an orderly fashion is what we usually recommend. But I mean, geez, like even yesterday, I was talking to a guy. He's like, well, I don't need the company anymore. What should we do with it? And he said, we ended up saying, well, we'll just let it get struck because it didn't have any operations, had no assets, no liabilities. So
Yeah.
Awesome.
Sometimes that won't work. Sometimes that won't work though if you need to get caught up on outstanding corporate taxes. Yeah. Then we've encountered a part where we had to revitalize the corporation and get all those things filed, and then do the wind down. So you basically, it's a lot of extra cost. Again, if there's no revenues, you don't have to shut it down, but make sure that you've also filed all your corporate taxes, even if it's a zero return.
We're coming up to the hour here. We had so many questions. There's so more. So I know what we can do is we can take these questions. We'll get a copy of them We'll figure out a way to get these answered and uploaded to our website. I think at the end of the day, for the other ones like partnerships, make sure you reach out to Colin. There's a lot of legal when it comes to partnerships. That's really how you're going to secure yourself when you're entering into a partnership. If you have more social aspirations, nonprofit cooperatives are something you should definitely look at. There are, nuances to that as well, but I did want to throw it out there for that. And then the last one is I'm just going to plug a business startup kit that I did put together. We do have a 50% discount code on this. This is like foundational. We've taken a lot of time to put this together just to make it easy for those who are just starting up. We understand budgets are limited. So we've created a bookkeeping tool. Will help you keep track of your expenses and revenues and give you some pretty nice dashboards to look at so that you can stay on top of your numbers. I've also put together a business and financial plan template. And so you can use that template off Canva if you're building a business plan. There's great sections for your financial projections 3 to 5 years out. And then the last one is what I call the entrepreneur clarity tool. A lot of times when we're talking about what structure should I go for, which one should I build up, at the end of the day is like, how much money do you need to generate to sustain your lifestyle, to sustain your everyday living? And so the clarity tool helps you get to that number. And once you figure that number out, you're going to know what you need to generate from your business. And then from there, you can decide which structure works best for you, which avenue you're going to go down, and go from there. So it's a great 3-part. I've thrown in a bonus there for a startup checkup list. I know a lot of people on this call here are still in the ideation stage. So it's a comprehensive checklist that goes through everything that you need to know before you go to launch. So we'll have a copy on this. I think ATP is going to send out just the link as well to this, but make sure you look for that in the email. As I said, a lot of questions. We'll try to answer those offline and get those out to you. But other than that, I think that's about it. Bontu, if you have any closing remarks you'd like to make.
Awesome. Thank you so much. I think this was really great. And yeah, I think we had the most interactive chat today. So thank you for taking the time to share a bit of your knowledge. And I think just to the audience as well, thank you for your participation. It's very important to have conversations with experts and professionals because there are a lot of things that, I was taking notes and it's a full page here. And, it's just really great to reach out to the experts to be able to understand how to best structure your business because it's going to help you in the long run as well. And you don't have to, figure those things out once you're in trouble or whatnot. So especially when it comes to taxations and legal, it's always important to have those conversations. So thank you again. And yeah, we'll figure out how to get the rest of the answers or the questions answered and get those shared. So we'll wrap it up. We're a little bit over time, so we'll wrap it up for today. And my colleague Carrie will post a link to our feedback survey in the chat, and we would appreciate it if you could take the time to respond to the survey before you move on with your day. It gives us an idea of what you thought about today's session and any ideas that you may have for future webinars. And so also remember to keep an eye out for an email within the next few days, which will include the recording, follow-up materials, and registration links for our upcoming events. A few things we have, or a few things to just share around upcoming events. For those of you in Calgary, we do have an in-person session on January 30th focused on solutions for the top 5 business tax mistakes. So a great follow-up from today's conversation. And we also have a live streaming for this event for those of you that aren't able to attend in person. For those in Edmonton, we have an in-person session on February 7th focused on optimizing business tax preparation. And then our next webinar is on February the 8th with a focus on understanding corporate taxation. So make sure to subscribe to our newsletter at atventrepreneur.com to stay up to date on all of our events and to receive relevant business articles. And that is it for us today. So thank you. Have a wonderful day, everyone, and we will see you soon.